Good afternoon and welcome to this afternoon's session with National Energy Services Reunited. We're happy to have Sherif Foda, Chairman and CEO of the company, with us today to discuss the unique opportunity of NESR, which from my perspective is one of the highest momentum businesses in the oilfield services landscape, certainly driving high growth of its high margin business lines. So we think there's a good value opportunity here, and we want to emphasize that with shareholders. So with that, we'll welcome Sherif and maybe just jump right in here. Obviously, we saw OPEC continuing to reflect their confidence in the demand recovery with their announcement yesterday, confirming that they'll bring supply back online. What's your sense of the pace of the recovery from a global demand perspective, Sherif? And how do you see OPEC's supply evolving past that July timeframe?
So thanks Dan. Thanks for having me. As we said all along, I think the recovery is on pace. I would say it got a bit delayed because of what happened in Europe and what's happening now in India. But you can see that the demand, like in China, for example, is back to what it was. And you see that the OPEC all along knew that there will be a fast recovery, especially in the second half of the year. They are preparing themselves for that. They are preparing to put more oil to the market. I'm more of the optimistic view that the H2 is going to be even stronger than what people believe. And I think the demand is going to get back to the 97, 99 but towards the end of the year, which means that you need still 5-6 million barrels per day, which definitely the OPEC has that capacity, and they can put this without, in a very short period of time. What they emphasized all along is they want to make sure that the people are disciplined, and you can say historically some countries were not, and now they are disciplined and they are actually meeting their quota, and they are meeting the cap, if you like.
Yeah, for sure. And I think that discipline has been well emphasized in North America. I mean, do you think that there's a price level that OPEC is thinking about? Do they want to maintain prices in and around sort of 60-ish, 70-ish dollar Brent? And as long as they're there, they'll be comfortable to allow activity to pick up elsewhere in the world? Or do you think that they want to continue to gain market share?
No, I believe you're right. I believe, my personal view, that they are happy if the US is disciplined and not adding too much rigs and too much production. They are happy to maintain. And I think that's more important than the price. If they are not disciplined at this price level, then they will put oil. And it's not particular, they don't pick on US. I'm just saying overall market, if they are the cheapest producer today, and they see others coming to the market because they are the one cutting supplies, they will not cut the supplies. They will put oil to the market to make sure that they maintain that they are the cheapest supply to the world. So the way they look at it is they look at it at what's happening now. People are still kind of disciplined at this level, so they are happy. If they see that people are going to add too much rigs across the world, they are going to put more oil to the ground, and they are fine as well with 50, right? And if the 50, 55 is the range where people are not disciplined, then fine.
Yeah, well, I think given our experience over the past year, if they're happy, we're happy. So let's just stick with that.
Exactly.
Do you see any risks within the group? Do you see any risks between the Saudis and the Russians, or do you feel like there's good collusion within the group right now?
No, my feeling is they have a very good, they passed a couple of hiccups before. I think they are adamant to agree on that, but it doesn't, when you say there is no risk, no, for sure there is risk. These guys always, they can fight and they can get, in disagreement. I wouldn't say fight, but disagreement in some of the caps based on some of the strategy. And I think I would say the Russians are more focused or more convinced that they should be the first one to produce before anybody else is to produce.
For sure.
They would be more willing to put more oil faster than the Saudis. where they feel that, a more collaborative approach is better.
Yeah, I agree. And just maybe moving to the Saudis for a second. I mean, Aramco trimmed their budget about a month ago. They've now divested some assets. They're suggesting potential upstream sales. What do you expect from Aramco here? I mean, do you see this as de-emphasizing their producing assets to support Vision 2030? Or do you think this could potentially be a reallocation of capital towards some other expansion initiatives elsewhere in their portfolio?
No, absolutely not. It's the opposite, actually. I mean, they are very, very focused on their MSC. They are discussing seriously increasing it to 13, and they will definitely announce it at the right time. But they are very looking at all the reservoir, how the best to get the recovery, how best to sustain the gas production, the oil production, and if you look at it from year to year, they have a massive increase in budget, year over year, right? I mean, people still look at this from the proxy or from the prospectus, basically, when they announce with the public. But if you look at year to year, they are actually increasing dramatically. They almost 30% plus budget year on year. So they actually have a very sharp increase in this year over last year. So no, they have definitely very, very focused approach on the production. And the Vision 2030, again, it is the kingdom vision to diversify the economy, to have, open for tourism, to open Riyadh as a hub, and on all this fantastic new project like NEOM and the Line and the Red Sea project and other stuff as well. So it's both in parallel, but to be able to achieve that, Aramco has to be very successful, right?
Yeah,
to be able to there is a lot of funding for all these mega projects, right?
Agreed. And with that context, and we saw from the oilfield services majors over the past week, their optimism for a bounce in international activity in the second half here. To what extent do you expect your activity and your backlog to grow into the second half of the year? What are your expectations?
So we expect the same. We are very, very excited as well. We said it all along. We said it actually since the last quarter that we see an H2 rebound in activity. Obviously, we grew when the market shrank by 30%. We still grew 27%. So, which means that we are not that, I would say, reliant, but definitely it makes a hell of a difference if the activity increases, because the pie gets bigger, the more projects get sanctioned, approved. So I see an H2 over H1 like the previous, I would say like 2019, where I would say you can have an H2 plus 20% of H1, right? You can see that. It's not abnormal. It happened before. And I think, I repeat, people are underestimating the magnitude of the increase, because people, when they want to increase all the time, there was the resource available, right? So you can execute on this that you wanted to do so easily, because everybody had a buffer, everybody had equipment, etc. People don't have that now. They don't have that because, first of all, they were very tight on capex, especially the big guys, very tight on capex. They don't have any buffer. And they did not plan on the chemical and all the stuff. And now you have restriction. So the restriction meaning you cannot send people, you cannot get visa. And if you don't have that kind of a buffer and you already released a lot of employees, when the activity increase and the client gives you like a 2-week notice, you will not be able to achieve that. So I think we are prepared for that. We kept some buffer in our system, and I think our localization will help us as well, that we will be able to capture some of this growth before the others.
Excellent. Certainly magnifies the opportunity. And in that regard, I mean, do you expect any specific business line to outperform in the second half of the year? I would probably guess production services does pretty well, just as the cartel's bringing volumes back.
Yes, you're absolutely right. Usually they add the rigless work, They add a lot of this cold tubing, stimulation, etc. work, and usually the production benefit better.
Excellent. And maybe just moving more specifically to NESR here. I mean, you've been extremely busy, Sherif. You've executed a significant number of agreements over the past 6 months. I call it 6 acquisitions, contract awards, partnerships, new business lines. I mean, you're doing it all, really. Can you give us a sense for the relative impact of all of those announcements in aggregate? Even particularly towards your stated goal to grow by 20%?
Yeah, obviously it all adds up and helps, right? So some of those partnerships are, as you saw, as long term. For example, Phoenix, beyond. So today we are drilling with Phoenix Motors in Saudi Arabia, beating all records that was done in all different motors in the same field, right? But this is like 3-4 jobs, so it's very good. But the magnitude, when you start to see that on the reflection on the numbers, obviously it takes longer time, right? Because you need to have multiple rigs, multiple runs to be able to see the revenue coming, right? But it's part of our growth potential. That's why we say we can keep growing plus 20% despite the market shrinking, because I'm replacing some people and I'm putting this. Another example beyond today, MPD, we don't even touch that today, right? It's not a huge market. However, it's nice to start to enter this project. Again, we did with the partnership. We have already 2 contracts. So we are awarded 2 contracts in 2 countries. We are not operating, Ivory Coast and Malaysia. So we are putting the equipment, we're sending the team, and then you should start to have revenue in these 2 new countries while you are qualifying the MPD services were in the Middle East in our core countries. And then obviously the biggest part that is going to be on our numbers would be the acquisition we did geographically in Kuwait, right? So we should be closing this in the next couple of weeks. Everything is agreed, and we're very happy with the due diligence. The company is more than outstanding. We looked at their bases, we looked at the facility, despite the fact, again, pandemic, right? So nobody's allowed, by the way, nobody's allowed to enter Kuwait. Nobody. If you even GCC national, you're not allowed to enter, right? So it's a total curfew and total blockade. So, however, despite that, we managed to, because we have local people, we have local lawyers, we did all the due diligence, everything we did virtually, and we're gonna sign our SPA virtually and take over the operation, which means that I'm going to have the 3 contracts running in Q2 going forward, which is very good, right? Because that's addition of new services, especially the drilling fluids that today we don't have. So now I added another segment with a contract of 5 years in Kuwait, which is unique operation for us. So are we satisfied? No. I mean, that's what we do, right? We like to be busy, and today we are working on another 3-4 deals. We will be announcing them as we go, and some of it is technology, which we will announce very soon. Partnership with very good companies, and some of it will be another acquisition in the region. So, and that's exactly the whole philosophy of getting to our $2 billion target. In a fast pace, right?
That's great, and it's excellent color too. I mean, between what we're seeing from OPEC and the pickup in activity in the second half, plus the agreements you've already signed and future visibility to agreements, I certainly feel like the EBITDA growth target of 20% feels like it's very much in hand. Is that fair to say?
Yeah, absolutely.
Excellent, excellent. I want to touch a little bit on the partnership side of things, particularly, or maybe to use Phoenix as the example. I mean, you've brought a new piece of technology into the region. What kind of benefits does that bring? Can you just give us a sense for the potential efficiencies that brings to an upstream operator, and maybe what the size of the opportunity is that in deploying that elsewhere within the region?
Yeah, sure. I mean, look, let's talk, for example, about the drilling, which is very important, right? The drilling portfolio today, let's say, in a very basic stuff that we say the addressable market is $2 billion, Okay, so from that $2 billion today, you have motors, you have performance motors, I mean, you have obviously rotary steerable, which is the majority of the work in the Middle East is rotary steerable, and have to be reliable rotary steerable. And you have a lot of work that is done with a lot of LWD. So, and LWD work is meaning not just triple combo, but the people wants to see around you, to see ahead of you. There is a lot of technology going on, right? Our philosophy has always been, I do not go and sell something I am not capable or I don't master, right? And that's why when the client come and tell us, let's do do this drilling here, we tell them, no, guys, this is very abrasive. You should do this with this company. Even I advise the customer which company to use, like from from the big guys, and I tell them this is the best rotary steerable. It works very well in this domain. Then now, when I have like the partnership with Phoenix, back to your point, they have the high performance motor, which is a bigger size, and they proved it in the Permian, and they proved that it works extremely well, and they actually have a very good, solid market share, almost in some places 30 or 40%, right? So we said, okay, is this applicable in the Middle East? Yes, it is in this country, in this reservoir, in this country, in this type of field. So we did the study, we did the homework, and this work has been done for the last year. And we only approached the customer when we told them, by the way, guys, I know you use this XYZ motor, our new motors will be better. And on top of it, the velocity with the new technology, with the MWD, with the EMAG and the mud pulse of Phoenix can make a difference. It doesn't work in all the formation, but it works in those type of formation. We've sent it, we proved it. Now you are saving the client money and you're bringing a new face to them so they like it, and they start to gonna give you contract. So today I have a mid-form contract, what we call a short-term, like a small contract, $5 million. And then I want to convert this to a big contract, hundreds of millions of dollars over 5 years. And that's when you are successful. But to be able to do that, you need as well to have the rest of the pieces. You cannot just have one piece, right? You need to have the rest of the pieces. And the rest of the pieces, that's how we work with our philosophy of partnership. Some of it we do in-house, and some of it we do it with the partners.
And do you think that importing a technology like Phoenix can truly lead to attaining a contract size on the order of $100 million-ish long term? No. Is that practical?
No, you cannot. No, you cannot. As I said, you have to have Phoenix for that part, and you need to complete the portfolio. But to be able to enter the door and show differentiation, that's what we did. And that's why we picked Phoenix, because Phoenix is better than everybody else in the market for their type of performance motor. And they proved it now in Saudi Arabia. And now we're gonna take it to Oman to prove it in Oman. And so that we're gonna establish that piece of the niche market of high performance motors, that Phoenix with NES is better than the existing technology.
Yeah, that's great. That's great. I mean, it's certainly nice to see.
This can give you, for example, let's say $20 million business. But to get the $200 million business, you need as well to have the rotary steerable. You need to have the LWD, MWD, which we are working on, right? Either going to be with another partner, or some of it we're going to be internal.
Yeah, I mean, the sum of the parts contribution of all of these pieces is impactful along the way. So, I mean, from my standpoint, I would expect that you will continue to import technologies like Phoenix and different technology offerings as we go forward.
Absolutely, that's the whole ideology of the company, of the open platform, that we are open for any new innovation, and we are open for anybody with that mindset of open platform. And we operate as well very transparently with our partner. We tell them this is the job, this is how it works, and it's going to be a long journey. And that's why I always say it, I deal with people as well I like, because there is a lot of trust that has to come, because the Middle East is a long term. I mean, you are going to invest, you are not going to have any returns for a while, and then you're going to get very good returns. But at the beginning, it's just going to be pure investment. So it's a negative P&L. And you have to have that kind of mindset. Oh, I like it, I'm going to invest, and I have to trust the partner. Like I have with Robert Drummond for next year with our relationship on the frac. Amazing, we're doing very well. And every time we get the proposal, for example, on another frac fleet, I give it to him as a right of first refusal. Tell him, Robert, do you want? And he tells me, no, maybe I'm very busy now. I don't want this job. So for example, today we are bidding on a job that is the third frac fleet very soon that so we get awarded, then Robert will decide, does he want to do it, or I'm going to do it alone if he doesn't want to do it. You see, that's the approach we have with our partners.
Yeah, I love that that visibility. And I mean, can you kind of speak towards the runway that you have out there? I mean, you talked about 3 or 4 deals that you're working on right now. What kind of momentum do you think you can maintain? And is there any specific business line or jurisdiction that you're looking to complement go forward here?
Yeah, I mean, I think the partnership, I would say we should announce them in Q2 and Q3. I would say 3 of the partnership with the technology guys. And for the acquisition, I think it's going to be hopefully maybe Q4 or next year, depending on the due diligence and and all the negotiation, obviously.
Yeah, very good, very good. And do you expect with those deals and partnerships announced, do you think that the revenue mix of the business will change very much, or do you think it will stay sort of 2/3 production services and 1/3 drilling and evaluation?
Yeah, it's gonna start to change, obviously. I think if we finish the acquisition and we finish the partnership and we finish the technology, I would say from like 22, 23, you start to have more of a 60-40, and then yeah, I mean, it can go to 50-50, but it's gonna be some time, because as this is growing, the frac is growing. You have to remember that. And the frac in the Middle East is going to be a big part of the business with the unconventional, right? So today, for example, I was discussing this morning with one of our IOC clients, and they're talking about the frac, right? So there is a momentum of this unconventional getting the gas, especially that the whole region now is talking about 50% gas, 50% renewable for their entire power, and the rest they're just going to export it, right? I mean, Saudi Arabia said by 2030, there is no oil at all. It's just oil is purely for export. They're going to be like Germany, renewable and gas, right? So I think the gas is going to come with a lot of frac, which is definitely, it is something that what we want to be the premier frac company in the Middle East. We want to be #1 everywhere for our stimulation fracturing business.
Yeah, fantastic. That's great. I love that color. And maybe just touching on what you're referring to there with the transition to gas and trying to be more sustainable in the region. You recently created an ESG business unit. I'm curious, what are your goals for that business unit?
Okay, so the ESG impact we launched in January is purely to focus on making our industry greener. So this is not energy transition. This is not hydrogen. This is purely, today I am producing oil and gas and I'm operating in the oil and gas. Why can't we make that oil and gas better, greener, right, as an industry? There is a lot of technology that exists that we can have quick wins, right? Example, water is low-hanging fruits. We are living in the desert. We have all these projects, but we produce a lot of water and we dump it, right? We leave it in like the Midland to evaporate or whatever. Why can't we give this to the community? Why can't we plant trees with it? Why can't we do something significant to get carbon credit, right? So we propose this to the Saudis, the Omanis, and they love it, right? And today we have the partnership with Salttech and Cleantech. And basically the Dutch folks that I like a lot is to take any type of produced water and make it fresh drinking water. And I think we put this in our community and we give this water to, instead of taking their water to frack with it, now we're gonna give them water to use it in the desert and to plant trees and to get carbon credit, zero discharge, liquid discharge projects. There's so many things to do, right? So the water is very exciting. The other leg which we are working on is the zero flaring, and taking that flared gas that until today the industry worldwide is doing, which is a crime. I mean, we know the technology, we have the technology as an industry. Let's stop flaring 100%. We can, right? It's cost money, but we should do it, right? The third part is how can we get some significant differentiation in emission control, which basically we have, we're going to announce, that's the biggest part that we like. We're going to announce very soon a partnership and an investment in a company where we have breakthrough technology in monitoring methane and emission and saying what to do with it as well, right? And we're trying to combine this with some H2S measurements. And if we do that and we can provide all this to our clients, then they have I don't want to say one-stop shop, but they have somebody in the region with the latest technology that we are in it. We have as well investment, which we announced, for example, in geothermal. I think geothermal is another fantastic opportunity. We are working with it in Indonesia. Today, you know, we have operation in Indonesia. We don't talk about it a lot because it's small, but we are working with the United Nations and the World Bank, where they have a project, a full-on project for Indonesia for geothermal. And I think we want to bring more technology into that arena. I think there is a lot of untapped resources of energy with the geothermal, and we will be able to do that. So all this is basically that's why I called it ESG impact. It's not our ESG reporting, which we definitely do, but this is how can we impact the industry? How can we be a contributor, not only to us, but to our clients, to enable some of this to happen.
That's fantastic. And so between the water, the flaring, emissions, and some of the other initiatives, I mean, it's a huge addressable market out there for these things. How big do you think that business line, the ESG business line, can become for you from a revenue perspective?
So our aim is to be $100 million of that business in 2 to 3 years. Excellent. That's our goal.
And where do you see the margins of a business like that shaking out?
Same. Should Excellent. Be the same. Yeah, it should be. I mean, I wouldn't say better, but it should be the same. Yeah.
No, that's fantastic. I mean, that speaks a lot to the investability of NESR here for investors who are increasingly aware of sustainability initiatives. So we love to see that. That makes our job a lot easier. So Sherif, when we look at the business here, I mean, it looks like a pretty clear runway here. I mean, goal of 20% growth per annum. You've got a ton of momentum there. And ultimately looking to achieve, call it 10% market share. Is that still the long-term goal there? And how long do you think it takes you to achieve that?
Yeah, I wouldn't say long. I would say that's our midterm, right? So our midterm is to be $2 billion, 10% of the market. Obviously, our ambition is always to do that in 2 years. So let's see.
I love it. And what are your main impediments to achieving that? Like, where's the friction towards achieving those goals?
Drilling portfolio success, acquisition M&A success, and oil price collapse.
Yeah. Okay. Excellent. And I mean, you touched on this a little bit already, but the concept of the open platform, is that a real differentiator for you versus the majors, where you can import sort of differentiated, really tailor-made technologies for clients? Like, is that meaningful?
Oh, absolutely. It's a huge difference. So I tell you, I mean, with obviously I lived all my life in a big company. So when you are in a big company, and the client wants to use, let's say, I give you a best example, a plug, frac plug, right? And you are Mr. Baker. What would you sell? Baker plug. And for sure, if I am there, I will have to sell Baker plug. If it's not the best, I would say it is the best. So now I am doing the fracturing, and I have a partnership with Nine, right? And Nine has an amazing portfolio. However, in some application, Nine plug is not the best. There is another plug that is very good. No problem. I use it immediately. So And that's how I tell the client, I search as well, what is the applicability and the best for it. The same thing for the customer could be inclined to use someone, like for example, perforation. In the olden days, perforation was like only done by Schlumberger, let's say, put it this way. And over the years, everybody is in it. You have now, Dyna, Geodynamics, GR, etc. The client wants to use this because he's comfortable with X. No problem. I have a partnership with Geodynamics, but if the client wants to use the guns of, whatever, Dyna, no problem. I have no issue whatsoever to use. I obviously make sure the quality, the HSE, the applicability, but I can import explosives in this country, and I am flexible to use what that client wants. With that flexibility does not exist with the big guys, cannot exist. It's their IP, is their R&D, which it's their right. I'm not saying they are wrong. It's their right to defend it, because if you spend this amount of R&D in your portfolio, you need to defend it, right? This is why you spend all this. Today, my R&D is this, is my partnership. So I spend, and I have very small R&D that I do in headquarters here with some of the ventures that I do, but it's minuscule, right? I spend not even $10 million on that. But I do today give some money, again, to innovator, but I don't own them. And that mindset is different, which is, by the way, this is what is used in the tech, right? In the high tech, in the Silicon Valley. You have all these innovative people all the time coming up with ideas. The innovation comes with small people, usually small guys together that came up with something so unique and tailored, but they cannot sell it because they don't have the platform. I am a very good platform because I exist in all the Middle East countries. For them, they cannot access that market. And I'm very happy that we share as well the profitability on that if they have something that is credible. Because for me, the key is I'm not an agent. I go to the client, I say, I check that technology, it will work in their reservoir because I have technical people checking that.
You took the words out of my mouth, Sherif, with the analogy to tech and the benefits of the open platform. I mean, I think that's super thoughtful on your part. So excellent work there. Maybe just one last question, and that's as it relates to as we evolve out of COVID here, and you've talked about how you've maintained your workforce in the region, but I've also got to assume that that's come with some inflationary costs, whether that's to your labor costs or even other costs being seen in steel and stuff like that. How are you managing sort of the inflationary pressures that we're seeing out there right now?
Well, so far so good. Let's put it this way. We have very long term in some with our suppliers. We again buy a lot of stuff on consignment, keep some buffer. So far we are managing it very well because the customer are not accepting any price inflation. Very honestly, right? They have a lot of pressure on themselves as well, and they're expecting us to measure it and to manage it. And with all of our suppliers, our partners, we do a very long term. Again, we're very transparent. For example, the chemistry. Today we have a partnership with Innospec, right? So we told them exactly, guys, this is what we would need for friction reducer, for surfactant, for. We need to prepare for this. You need to prepare the chemistry. We need to prepare to send this to Jebel Ali, to send this to the boats, because maybe we'll have an issue. I don't want, like Suez Canal was blocked and I have a problem. So I don't want to have any delay with my customer. So, and they are very good. And we managed to have all the chemistry in the country and told the customer, we have 3 months, no problem. So it's a lot of planning, but definitely you need to do it. And if the inflation continues, yes, we have as an industry, I think we need to work with our customer to get some of this pricing back. I think the way the service companies are totally destroyed with the pricing pressure, and they usually never gain it back, right? It's kind of like lost and then never come back. It needs some discipline from the industry, from the service industry, from the modeling, some of these contracts, like like this LSTK stuff, which is luckily we don't do, but some of that, because that's some pricing, you need to get back some of it. We don't want to increase the price, but we just need to tailor a bit because we are getting all this inflation. but we never managed to get anything. The best thing is the personnel cost. If you look at our personnel charge versus the inflation of personnel over the last 20 years, it never went up, it only went down. So we only can charge less, but we pay our people more.
Right. Nope, that's great context. Well, I mean, Sherif, that rounds it out for me. I mean, I think you've done an excellent job of framing the opportunity. Goes a long way to, again, emphasizing the momentum of the business and really the unique thing that you're building there at NESR. I really like some of those attributes that you're referencing, particularly through the open platform and some of the abilities to preferentially drive growth in that regard. So. The benefits are not lost on me, and I think our clients will similarly appreciate it. So, want to thank you again for joining us today, and we look forward to more continued high growth and high returns for the business.
Thank you very much. Thanks for having me, Dan. Thank you. Appreciate it.